If I had to learn options from zero in 2026, I would skip 90% of what you see on YouTube, including the videos sitting next to this one, or the ones in your suggestions right now. I would not start with zero DTE options. I wouldn't start with selling covered calls for passive income. In this video, I'm going to tell you exactly how I'd learn it, the sequence, the process, and exactly the you need to skip. If you stick to the end of the video, you'll actually have a curriculum, not some basic options guide. You'll actually know how to not be your broker's best customer. Now, I know this because I was mentored by ex-Goldman Sachs and ex-Bank of America traders at the Institute of Trading and Portfolio Management, and have also interned at a hedge fund based out of Singapore. So, 4 phases in order. One market, horizon or your gambling, how professionals actually use options, the risk, and a kill switch. So, one market, 90 days. What did the index do this week, not this minute, is something professionals keep asking themselves at all times. What's the regime? Risk on, risk off, Fed, liquidity, one sentence, you gotta ask yourself. What's on the calendar in the next 20 to 60 days that can reprice this? Whether it's Fed hikes or Fed cuts, whether it's non-farm payroll results, whether it's CPI repricing, what oil is doing, and geopolitics in general. That's kind of what you really need to be looking at. Horizon first, zero DTE last, or maybe never. Professional traders almost never ever trade zero DTE options. That's just a tool meant to farm out cash from uninformed retail traders who don't know what they're doing. Okay? Zero DTE is really just day trading with a countdown clock and extra theta. 20 to 60 days is the sweet spot professional traders use. That's enough time for a real catalyst to hit. Let me ask you this question. Do you think a stock is going to move more in 0 days or like just day trading, or enough in like a 30-40 day swing? You already know the answer. If I can't live within 20 to 60 days, I don't click it. If I needed to work out today for my week to be okay, I'm too big or I'm bored. I don't sell premium for monthly income. Cash secured puts or covered call writing is just garbage you need to totally ignore. And any person talking about selling options for passive income needs to be, because he is doing wrong by retail traders feeding you garbage where you are going to lose a ton of money if you follow that. So book a free call. I'm going to give you the entire sequence anyways, but if you want to know how to practically implement it step by step in your brokerage account right now, we can go over every single position you have in your portfolio right now, and we can go over how a professional trader might actually construct this book and the exact step-by-step sequences you need to follow. There's no Wolf of Wall Street type stuff. It's a simple free 30-minute call where we just go over every single position you have. You get the free playbook regardless. Now, the contract. Asymmetric payoff, not a lottery. You gotta learn this in order. Call versus put as a view, defined risk, defined loss. Delta, how much this behaves like a stock. Theta, rent. Time is the cost if you're buying options. And liquidity. The S&P 500 and the QQQ, if the spread's a joke, pass. This is the garbage you gotta skip. Most people are just obsessed with the Greeks, option Greeks. I want to learn option Greeks, what's Vega, what's Rho. Most of it is really stuff you really don't need to know about. The main ones you got to know about is gamma, theta, delta. Credit spreads for high probability, a total joke. If you look at it from a risk reward perspective, you're going to get, you lose 10 times your money than what you actually make in one trade. Earnings lotteries because IV looks interesting. I'd rather you just skip playing high IV names regardless, okay? This is the garbage you gotta skip, okay? What you gotta learn? You gotta learn calls versus puts, delta, theta, and liquidity. Your bid-ask spreads between names you choose to trade options on. So if I started over, the first 90 days, this is what I'd do. I would trade one market, the S&P 500 or the Qs. Daily 20-minute regime note, no live options until I can write the view in one sentence, 10 sessions in a row. You do this, you'll be ahead of like 95% of traders anyways if you just sit down for 10 days and write down for 20 minutes what the regime is and what you see. Then after 1 month, I'd suggest you start trading paper accounts, or you trade like microscopic size, okay? Only 20 to 60 day structures and only around a dated catalyst. One contract of the math says 1, 0 if it stays 0. Days 60 to 90, the same rules still apply. You absolutely don't trade any 0DT options. There's no income selling strategy for passive income. If you can't follow the kill switch for 90 days, your kill switch risk management rule, that's a process problem, not a strategy problem. If you want to know exactly how you can implement this in your book right now and how you can actually trade options to a professional standard and manage risk the way professional traders do, thinking as like a portfolio and not as like one hero bet, book a free call, 30 minutes, no Wolf of Wall Street type stuff. Links in the description below.